AMD trading lower along with most of the semi-complex. And more broadly here, it has been a pattern that we've seen throughout this earnings season. Tech companies beating estimates, even raising their forecasts, and the stock falls. We're seeing it again this morning with Qualcomm. So let's dig into what that reflects about the AI trade and where investors should be positioned right now. Joining me, Ivana Delevska, Sphere Invest founder and CIO, and Sylvia Jablonski, Defiance ETFs CEO and CIO. Ivana, I want to start with you on this Qualcomm example specifically because, again, we've been seeing this playbook sort of throughout earnings season. Here, it looked like Qualcomm had a pretty good quarter and the stock is falling. So what gives here? What's your perspective?
So Sylvia, what we've seen this earnings season is that it's all about positioning. So it's really not so much about what the companies are reporting, but more about how investors were positioned going in. Specifically to Qualcomm, they announced a new data center chip a few weeks ago, so the stock was up on that going into the earnings. They didn't quite provide any additional detail on the earnings. They said that more details will be coming next year, and this is why you're not seeing an outsized positive reaction to the beat.
Sylvia, what do you think sort of more broadly here? Because it's not unusual to see this. We've seen it throughout earnings season where the numbers initially look okay, but then the stock's been falling. Does this just reflect this sort of underlying wariness about the valuation question?
Hi, Julie. I think it's a great question, and it's really a great point, right? Because earnings seasons have arguably been coming in, fantastically. Even the companies that perhaps didn't, meet analyst expectations have done quite well. We're having 80% beats on the top and the bottom line. My take on this is that expectations are so high. There's a lot of talk about overvaluation, and essentially any little, deviation from the perfect report, I think is at this point going to set investors to perhaps take some gains in their positions or reduce because they're worried about this overvaluation problem and where we are. But what I would say is, when the market's rallying and these stocks are at all-time highs, which has been, every other day over the last couple of weeks, right? We hear a lot of investors saying, I have a lot of FOMO because I couldn't get in, right? And so here are the dips. And if you think AI is going to stick around and you think these companies like Qualcomm, Broadcom, Supermicro Computers, AMD, NVIDIA are going to be part of AI and the build out in AI infrastructure, it's worth considering looking at these names now.
What do you think, Ivana? Do you think the sort of buying the dip approach is the way to go when you see these kinds of sell-offs?
Absolutely, Julie. And to Sylvia's point, I think we do see people overbuying the stocks, but if you look at the valuations, they're not necessarily high, and this is because we're seeing the beats. So right, each time a company beats expectations, the multiple, if the stock doesn't positively react, the multiple goes down. So this is why the dips are really good buying opportunities, because you're not really chasing a higher multiple.
I mean, to some extent then, Ivana, I'll put this one to you first. To some extent then, do the actual details of the earnings become less important in a way? If you're buying into this whole AI thesis, and you think that a broad swath of companies is going to benefit, like how much does the quarter by quarter matter?
So quarter by quarter doesn't necessarily matter, and the earnings reactions don't matter, but the numbers are very important in the long term, right? Or even on a few quarter basis. So if the companies are not consistently beating, it's gonna be almost impossible for the stocks to keep going up, right? So you really need the numbers. Now, whether they beat expectations by more or less than the buy side expected, that's gonna determine the quarter reaction. But whether they're gonna be up into next year, it's really gonna depend on how much did they beat by on several quarter basis.
Well, I want to bring up another example here with you, Sylvia, and that's Supermicro, which you mentioned. The company reported earlier this week the stock did fall, and there, it's not just about beat or miss, right? It's about, do you see that long-term path for growth? What did these Supermicro numbers tell us, especially given the fact that they recently sort of warned, and are there any concerns there?
Well, and to piggyback off of what Ivana said, I think it's a great point to make, right? The numbers do matter because we need to justify these multiples in order to get people to want to buy them. And I think, and then, dips in that case are good if the news is good. So with Supermicro, they came out and said that there were some design issues here. If you look at the overall global sales for the semiconductor industry, it's about a quarter over quarter growth of 15.8%. And, this company was kind of down 15% quarter over quarter on their side. So I think investors, though, because it has fallen quite a bit, this is a stock that has been a performer over the last few years, and they are a pure AI play. They are a company that's arguably, going to have some leadership opportunities in data centers and edge computing and 5G, in the general AI build out. And so I think that they're kind of in the right spot, right? So it just depends on what happens now with these designed and customizable chips, what kind of opportunities they get. But historically, it has worked with this stock to buy on the dip. That being said, again, to Ivana's point, the numbers do matter, right? So with the other companies that are falling, the numbers are there. So with this, we're going to have to wait and see.
And something else that is sort of out there in the ether, another story that was reported today, has to do with M&A. And so I'm curious to ask both of your perspective on this. It's the story that Bloomberg is reporting that SoftBank had looked at Marvell Technology, possibly to buy it and combine it with ARM. And Ivana, I know that Marvell's one in your portfolio, so what do you make of that story? And do you expect more consolidation to happen?
Well, Marvell has been specifically very undervalued here because they did not out-deliver on the 2 prior quarters that they reported. And with expectations being high for the AI trade, the stock has really not performed well this year, especially compared to peers. So I think it makes total sense that SoftBank would be looking at buying it here. I think long term, it's a very strong story. They're levered to Amazon. And Amazon also themselves struggled a little bit to get Trainium up and running. Now it seems like it's doing much better. So I think the fundamentals for the rest of the companies that are exposed to Amazon are getting much stronger into 26. So the fundamentals for Marvell are pretty solid.
Interesting. Okay, so whether it's a deal, whether it's things inflecting a little bit better for Amazon, Sylvia, kind of what's the next catalyst now for growth? I mean, we've got NVIDIA coming up on November 19th reporting its numbers. I guess you could debate whether that's going to be a positive or negative catalyst given some of the reactions we've been seeing. But is that the next thing you're looking to? What's sort of the next thing now?
I mean, in terms of, we need the quarterly earnings calls. We need to hear what they're doing. We need to hear, particularly from Jensen Huang, because he is essentially the poster child for AI, or the stock is at least. Very much the bellwether and the market driver really this year. So it does matter. But that being said, I'm looking at, AI. The AI trade has worked incredibly well for investors in most semiconductor positions. I'm just trying to think about where is the puck going. And I think that now we're starting to have to look at the second and third derivatives of AI to really find these, kind of hyper growth opportunities potentially that can exist. And I think that looking at AI infrastructure, the energy, the AI powered infrastructure play behind just the chips and the whole, movement, it will be an interesting place for investors. Like, you just look at these energy companies, you mentioned it at the start of the segment, they're doing quite well. And I think a lot of that is because they are powering this phenomenon here. So I'll be looking at AI powered infrastructure.
And what about you, Ivana?
I think that's spot on. Basically, we are ahead of the next wave of investments in AI, and it's specifically targeting the infrastructure side, so both physical infrastructure and software infrastructure. So I think there is a lot of opportunities on the networking side and a lot of opportunities on the power generation side.
All right, ladies, thank you both for being here. Appreciate it, Ivana. Sylvia?
Thanks, Julie.
Thanks.